what's up, everybody, man? Welcome back again. Sorry, I think we're both pretty busy. We didn't have time to make any videos, but we're back, to discuss about some good things that is happening around the world. Pretty interesting, actually.
A lot of stuff is going on. I'm not keeping up with it. You're
Uh,
keeping up with it. I'm trying to understand it, but welcome to the show, anyways.
So, dude, what I've been following up recently is the whole, like, the economy of the world right now,
Hmm?
and which most economists are like predicting right now that we're probably not in a very good state. Like, we're probably in the worst state that we've ever been, ever, right?
Yeah, last time we talked a little bit about Venezuela and about which other country? There was also going Brazil? No, Argentina.
Argentina, Zimbabwe, Venezuela,
Ah,
yeah. So, dude, like, it's not since the last time we sat down to make discuss about this. Things have got even more worse in many parts of the world, and honestly, man, it's never a good time to educate yourself than right now. Like 20 years earlier, like our parents didn't have to, but times are such that if you do not educate yourself with what's happening, like, have you heard this story of, like, if you had like a million Venezuelan dollars
hmm,
or whatever the currency is, back in 2012,
hmm.
that would be worth 37 cents today. So anyway, like, what I'm saying is, like, it's everybody's choice, but yeah, the reason why like we're making an effort is, if you don't, dude, people need to survive, people need to eat, like, things go in a very darker side, and it's better to avoid all of that and focus rather than like how the economy should stabilize, but we're not here to talk about how economy will stabilize because it doesn't depend on us,
No.
but maybe, like, we can at least be ready and be educated
Yeah, a little bit aware of what's going on.
if things go wrong,
Yeah.
at least.
Options are
Yeah.
always good.
Exactly, man. So we know what to do, right? Yeah, man. So we'll discuss about that. So, dude, like, there's this guy called Raoul Pal, right? I would like to show you like what he's been saying about this whole, what he thinks of the whole economy that is going on right now. Now, before, like, I talk about anything, one of the first things that I'll say is, like, this is us doing research about what's happening, and trying to understand ourselves. We are not experts. This is no financial advice at all. If in case you want to do some financial advice, financial investments, we highly advise you go to meet financial advisors and then do whatever way is better for you. But do not take this as any financial advice, but just a way to educate yourself, right?
Yeah. Yeah.
So,
one part of educating yourself is
yes, man.
listening to others and trying to learn, and we're also trying to learn here. So
So yeah, dude. Like, so here is what they all have to say, and this is one of the biggest one of the biggest guys that the world follows in terms of finance, and this are their point of view, like, or like what's happening. And he made a tweet on Twitter, and yeah, dude, these are the things that he said. Like, where are we all on a currency crisis overall, right? Dude, he talks about. Some of these currencies that, like, let's start with JP Morgan, not even currency. JP Morgan, one of the biggest banking, banks there is, financial bank. So we can see it's not really doing good since 2011.
is that their stock?
That's their stock, bro.
Wow.
So that means, like, in 2011, if you trusted one of the biggest financial companies in the world,
Which
like,
you would have, I guess.
of course,
yeah.
man, if you had money, like, you want to be safe, right?
Yeah.
Not really, man.
Yeah.
So from $110, it's crashed down to $60, right? And and here he talks about the Australian. Is this Australian dollar? Yeah, Aussies. Yeah, the Aussies are sort of breaking down again. So after 1998 and crisis, they recovered, and since then
Oh, it's
it's
going up
just
and down,
going
up
down,
and
down, down, and
Yeah.
Kiwi, New Zealand, right?
Yeah.
This is how it's going in New Zealand. Yeah, dude. So basically, the charts in 2015 to 2019, are going down, and this is Korea, one of the most crucial levels in history. The big wedge pattern tends to resolve in explosive moves to all new time highs for the dollar versus KRW, the currency that they have. So they are highly volatile, I guess. The Canadian dollar is also suffering a little bit, but not as bad as other ones, I guess. The pound, oh yeah, pound is doing really bad. And yeah, dude, like it's, you can see this is from 1970s, yeah, Philip, and this is 2019, and yeah, dude, we're not doing so good. And these are one of the strongest currencies in the world. The euro is definitely doing really bad. Deutsche Bank is, maybe pretty soon we'll have a JP Morgan. No, what is that? What are the banks? But anyway, they're going down. Maybe really soon, but maybe I'm wrong. But maybe the charts don't really show that. This is the Chinese currency. Like if you don't know, like recently the Chinese currency devalued a lot. This is almost like $8, or more than $8 it was, and it's gone down to somewhere between almost 6 point something. 6 point something, bro. It's like 7, right? So it lost almost more than 10 to 15% of its value just overnight. So gold is something that is doing maybe right. He feels right. It just, I mean, people are buying more gold, and it's like the prices are going up, right?
There's a lot of people always comparing to gold. I mean, we covered that in the last couple of episodes as well. You know what gold has to do with currency and all that. It's because gold is actually not a currency. It's not a fiat currency in that sense. So it's here in the charts. So it's not even like a stock, right? Because a stock is also affected by the value of the company according to its dollars. But a gold chart, that is completely different, no?
Yeah, gold chart is totally different, and normally you'll see this. What happens is, like if you see, like for example, like if you're holding Chinese currency, right, and you are one of these guys who's got maybe billions, right? When you lose 15% of a billion, that's a lot to lose, right? So for foreign exchange, like I mean, currency, all of these, and the same with gold, right? When people lose their, I mean, see, you don't want to. Do you want to lose? You don't want to lose even 100 rupees that you have, $100 you have, right? But it's the same with everybody. That doesn't matter what amount, right? You want this at least not to go on minus. If possible, your interest is great, right? And you see the prices of gold going up, and the reason why is one of the reason why. I wouldn't say just the reason why, but you can see all these currencies worldwide. People, the biggest people who basically make the economy run, right? They are the ones who lend. They're the ones who make the lending, like the whole cycle. Like if you don't know, please check out the video how the economic machine works. I think I've showed it to you also once. And dude, so these guys are hedging against gold, and in many cases even Bitcoin, right? Because that is what like has value according to them. And dude, he also talks about Bitcoin, which is doing really great in terms of this crisis. But this is also like August 7th post. So
it's some while back.
So at the same time, like now they see that Bitcoin hasn't really proved that when all these market is going down, Bitcoin prices goes up. So they're still at the phase to really find out.
Okay, so that is not proven, but that's what people are trying to show.
I wouldn't say people are trying to show. They're comparing it. Comparing it to see the relation.
All right.
Like for example, right? Now when you see the gold prices go up, there's probably all the currencies, something to do with currencies in maybe whatever countries, maybe one reason, right? So similarly, so since Bitcoin is also considered as digital gold in many places, I mean many asset firms are taking it as a digital gold, right? So they're trying to see. Because Bitcoin has only been there for like 10 years, right? While gold has been there for like 1,000 years. And if you even check the last 100 years of history of how the markets have performed and how the gold prices have been, you'll see every time, like people lose the trust on the currency system, the prices of the gold definitely goes up. So yeah, dude, we're pretty much at this stage right now, and economists like, yeah, dude, Raoul Pal are like, this is what they have to say. Like, screw your and my thinking over here, dude. These are people like with 30, 40, 50 years of experience.
Yeah, of course.
And this is how the bond is looking, dude. The bond market, like overall. So if you invested into bonds, you would be getting, I guess, 7% return, where it's gone down to literally 2%, right?
Yeah.
And this is short-term rates have gone down to -2%. Now, why would you want to give your money?
You would not. Would you just hope for that you're trying to catch it in a low dip that will eventually go up a little bit, and then you have to sell it? Is that what people try to do? I'm just curious here, because you see how it goes up and down, up and down, up and down. But it's still going down.
These are different things that we're looking at. Right now, we're looking at the 10-year bond interest rate, right?
You know, but you see that. I mean, compared to all his lines he's making there, you know, that's all going down. You know, the lowest dip is going down, the highest earning is going down.
Yeah, everything is going down.
So I mean, who would invest in something like this unless you're trying to catch it in a dip going up?
So, dude, like, okay, you know what bonds are, right?
Well, it's kind of like stocks, no?
It's kind of like stocks, but bonds can also be issued by the government, right? Like, let's say, if you want a safe investment, right? One of the safest maybe is to invest in the government, because the government will at least give you the money back, right? So what we saw earlier was, I would say, a lot of stocks. Now we're getting down into more like, okay, as an investor, I want to make sure my money is being invested into somewhere very safe, right? For the first time in what you're seeing, this bond like going down is the first time in like forever, the safest assets where you do not get much interest, like, or return, which is like only 2 to 7%, right? They are performing bad. Now what do? It's not just stock market, like the crisis that happened before.
Bonds
right?
used to be very safe and very stagnant.
Yeah, exactly. So if you talk about the crisis that happened before, it was stock market crisis. There was a technology crisis recently, right? Recently as like 2000 or something like that. And before that, there's capital market, like too much of borrowing, like too much of debt, like the crisis happened because of that, right? So right, and those times wherever people invest is people would invest into bonds. But when you look at the bond market going down ever since, right? So now, why would you want to invest? Like, okay, over here, like in 2000 we went through crisis, in 2008 we went through crisis, but looks like this is not going up, right? So this is where people are getting, dude, like, let's just see this. This is how you totally fuck the banking system. The EU banks are right off the cliff of death, right? So dude, this is too much. This is from $500-600 to $82, man. This is too bad. This is 2005. The Japanese banks are also doing pretty bad. Off to cliff from 1400. Oh my god, it's 1990 to, so like, see, dude, like every 30 to 40 years there's been changes. There's been changes about how the money works for all of us. We discussed, remember, there was the gold standard, and then people started printing money out of thin air, the fiat currency, right? And if you check, like, that's one of the things I want to talk, like, after this is a guy called Ray Dalio, right? Ray Dalio is Ray Dalio, whatever. He's one of the biggest hedge funds managers in the world. So basically, there's this saying in the internet: if Ray Dalio speaks, everybody listens, right? And he's got 50 years of experience as a hedge fund manager, and the kind of things that he's bringing out to the market is very concerning, but also very helpful, because his intention is to educate people on what's happening. Ray Dalio is something that I want to talk about, because he put out this article where he put his years of like understanding, analysis, and then he put it out. And you know, I believe our generation, like, or is such like that, we do not want to look back, because look at the generation difference, right? The development that has happened in the last, since you and I were a kid,
Yeah.
to the development that really happened before, which we didn't really see, and it didn't seem like a lot, right?
No.
And I think our generation is such that we do not want to focus a lot in the past, because past was about war, right? Past wasn't so good, like compared to what the future is. I mean, what
hopefully in the future we'll be holding, yeah.
And the future we hold right now, right? Yeah, dude. So
and we're on a crazy technology curve as well. I saw a couple of years back we're talking about the curve that we're in our technology advances, and we're just in the beginning of this crazy upward spiral.
Yeah.
So we'll see what
and
happens.
yet we already feel like we're really we've progressed a lot.
Exactly.
But
who
it's just
remembers life before internet?
So, dude, like, this guy basically, I just want to talk about this article that is written down, right? So, one of my investment principles is identify the paradigm you're into, examine if and how it is unsustainable, and visualize how the paradigm shift will transpire when which is unsustainable stops, right? Over my roughly 50 years of being a macro investors, right? Here he's talking about the paradigm shift, and the paradigm shift mostly occurs in 10 years period or so, right? So no matter how smart you think you are, every 10 years, according to the past that he analyzed, there is a shift in the market, right? In this, he talks about the paradigm shift, which occurs every 10 years or so, and the events that make it occur, right? And here's a few of them. A classic one of these unsustainable rate of debt growth that grows by that supports the buying of investment asset. It drives asset prices up, which leads to people to believe that borrowing and buying those investment assets is a good thing to do. But it cannot go on forever, because the entities borrowing and buying those assets will run out of borrowing capacity, while the debt services cost rise relative to their income by amounts that squeeze their cash flows. When these things happen, there's a paradigm shift, right? So if we go down, as you know, market pricing reflects expectations of the future, right? Basically, whatever is happening in the market, like what we discussed with the prices that's happening in the market of the banks or the currencies, it reflects what the market thinks of overall, right? As such, it paints quite detailed pictures of what the consensus expectation of the future is. Then the market move as a junction of how events transpire relative to those expectations, right?
Yeah, so if we all think that internet is, this company on internet is going to be a big thing, then everybody invests, and that becomes a big thing. I mean, money-wise, but that's not really true.
So to a certain point, like it can, right? But after that, maybe something else might come up.
Exactly,
right?
Because that's not the reality. It's just what we think.
Yeah.
It's kind of like when you did an IT bubble. We had a company in Sweden that became like the biggest company in Sweden.
Yeah.
It was called the Dream Factory, and that's basically what they did. It was just a dream. It was just a bubble. I should not be quoted on this, because I think he's actually still a pretty successful businessman. But I do remember him coming and having a talk. Me being in university or high school or something, and he was talking about how money isn't really anything. It's just like cookies. We can just bake more. They don't mean anything. And he made a point there, a good point. Yeah. But it was also funny because his company was also just a sham, basically.
Yeah. So I mean, that's the reason why governments exist, right? If you don't know, the first bubble in history is called the tulip bubble. Have you heard about it?
No.
So if I remember, this is maybe the 17th century or something like that. So there was this big hype going on for tulips, right? Tulip is... Because tulips can only be found in certain areas, I think, and only in this particular season, so it's already limited. But I think somebody like the guy you were saying in Sweden made a bubble out of this, and told, I think there's very less tulip in the market, but the value everybody wanted tulip was, in the old times, like whether with a guy or girl, flowers was the thing in the old school. Like you go meet somebody, like flowers was the thing. Yeah. So pretty much what happened was, if there was this much of tulip, for example, let's say 100 pieces, but then people wanted tulip so bad that futures tulip was being sold. So tulip doesn't even exist yet, but then
he starts selling
and maybe
the
it might not even
that he's gonna grow.
It might not even grow.
Yeah,
right?
exactly.
And people are buying to maybe sell. People are buying to just keep. So there's a big shit that happened also. But one of the first
something about that,
bubble in history is the tulip bubble, and it's something
bubble.
that we should all be very careful about, right?
And people were buying for a lot of money future tulips
Yeah.
that later on became worthless.
And,
or was that
and
not
there's the same
something
thing happening with the banks as well, right?
Yeah.
What's happening with the banks at the Deutsche Bank right now? Right, they have too much of future contracts, right? Which is also known as defaults, which is hampering the whole economic system right now. Dude, even to pay back, it's gonna take like forever. And if somebody in like, if the whole Europe had to bail Deutsche Bank out, I think Europe is gone pretty bad. Like, and that's just one bank. I'm sure there's more banks, and shit like this is happening even in India, man. Recently, in the last 1 month, a lot of stories have come out of banks not being, I mean, so true as they say they are, right? I would say it's the banks, it's some of the people working there, right, who have corrupt mind. They can't do anything about it, but hopefully the law decides for them. So yeah, dude, like every decade has its own distinctive characteristics. Every decade had its own distinctive characteristics, right? Through within all decades, there were long-lasting periods. Example, 1 to 3 years, that had almost the exact opposite characteristics of what type the decade, right? To successfully deal with these changes, one would have to successfully time in and time out, right? So if you wanted to make, like you're talking about the chart, you have to be very good and like to be in and out, right? So for example, like if you bought prices when it fell and sold when it rose, right? So a balanced portfolio would have, I mean, would be good for you overall, right? So at the end of each decade, most investors expected the next decade to be similar or prior decade, right? Let's talk about that, bro. So since you and I were kids, dude, the world has totally changed actually. For me, like there was nothing like back in 90s to what I see right now is something that we wouldn't, dude, screw that. When floppy drive came, we were surprised. Dude.
Yeah, I know.
When the CD drive came,
that was, technology is a wonder, you know? We're like, wow, SCD.
Dude, and these are the things that we know. You know, and still if you go to YouTube and we see other shit like, which is like amazing development or, you know, scientific, some people are playing around. So we still get surprised.
Of course. There's apparently a black fabric that weighs nothing and is blacker than black. You know, you shine a light on it, it just disappears. I mean, come on. What is going on?
So yeah, dude. So basically, our generation have got so much of education and more education than our generation got. It's
actually, there's a lot of information out there. It's pretty easy to be dumb today, actually.
Yeah, man.
Because back in the day, it was, you know, you just had to know about
certain things.
Yeah, exactly. There wasn't too much to know. I mean, you could know political stuff, geographical stuff, and then like, you know, the scientific stuff, but even the scientific stuff wasn't so much. And today it's like, I mean, the whole world of computers and that and software is just like, it's a world of its own.
Dude, and it's just opening. It hasn't even reached, like you said in the beginning, we're just still in the early stages. At the same like Bitcoin. Like Bitcoin has been here for 10 years. How long has been internet like really been? Like not too long, right?
No.
But whatever comes in the future is not gonna take so long for sure, man. So yeah, man. As the market movement as a result, market movement due to these paradigm shift typically were very large and unexpected and caused greater shift in wealth. Right? Every major asset class has a great terrible decade. Yeah, and we go a little bit down, and I'm gonna show you all of this that he's compared. So you see this chart over here from 1920 to 2010 and now, right? So he compares stocks, bonds, gold, silver, and other commodities, right? In 1920s, the stocks were doing super good, 17% in 1930, you're only getting like -2 to if you fast forward to like this century right now, it's at 13%, right? If you look at gold, right? 1920s, 0, 30s, 5%, 40s, 1%. And eventually, if you go to 70s, that's when people realize.
50s, the gold rush. That's when it went down a little bit.
Yeah. And in the 70s, right? That's when the gold prices became up again. That's also when the US dollar and fiat currency, 1971, when it started, right? Yeah, dude. All these basically asset classes have been like he's compared, and you will see not all assets perform good on every every year. If you check out the bond, like check this out, 16%, 39%, to what you get right now is 7%, but right now it's not even 7%. Now we're discussing about 2%, right? Yeah, so before you have high yields, man. Right now the yields have gone really bad to 0.5 over here in 2010. I'm sure it's even worse now. Yeah, dude. So if you want, like, please check out this whole article. I think it's pretty good to read the whole article, and you should also, man. Like, see now of the part 2, the coming paradigm shift, right? So what's coming that he discusses is central banks have been lowering interest rates and doing quantitative easing, right? Printing more money and buying financial assets, right? And that way is unsustainable. And okay, he's written up many other things, and I believe the monetization of debt and currency depreciation will eventually pick up, which is happening. It's something that we discussed in Venezuela and Zimbabwe, which will reduce the value of money and real returns for the creditors, and test how far creditors will let central banks go in providing negative real returns before moving into other assets, right? So also one of the places in Dutch, where is that? Not Germany. Denmark, yeah. Denmark is one of the first country where you're getting interest to take money.
You told me something about that. Yeah.
So the banks, so you like over here, like you have to pay interest, right? So for the first time in history, we're reaching that. Hey, take the money and
we'll give you money.
We'll give you 2%.
Yeah.
I mean, that's good for the guy maybe who's taking a loan.
Oh, of course.
But the guy who's making the whole market run by lending the money.
Yeah.
Now, when they start getting negative interest rate, they start to drift away from this market. And when they start to drift away, it causes a whole economy crisis. Hopefully not, right? Touch wood. Nobody wants this, but we are at this stage where they are not getting enough returns, and people like Ray Dalio are expecting, like, I'm not saying okay this will happen immediately, but people are moving into other assets, right? And that's why you see
that will also make that even go further down.
Yeah. And that's why you see the prices of gold, and you can see in the last 1-2 years the prices of people showing a lot of interest in bitcoins, right? And yeah, dude, so this is what's happening, bro. I mean, the coming paradigm shift, I think this is the last thing that he said over here. While I'm not sure exactly when or how the paradigm shift will occur, I will share my thoughts about it. I think that it's highly unlikely that sometime in the next few years, central banks will run out of stimulant to boost the market and economy when the economy is weak. And there will be enormous amount of debt and non-debt liabilities, right? Example, pension and healthcare. All the old people, like your family, your parents, my parents, all these years that they worked hard for. Honestly, we are at a very concerning time, because I'm concerned about my father, that all his life that he's worked hard to even raise us, and now he's just got like the retirement funds, and he doesn't know about it. But I'm concerned over here.
Yeah,
because
as you're seeing what happens with
and I cannot just go and tell, hey dad, like go buy gold. That's not really the answer as well. No. But whatever, I mean, the government or the whole country, right, suffers, we have to suffer with it, right? But definitely, like, if that's my dad's money, right? I definitely advise him, hey, buy some gold or whatever other assets you can, and he will not. I know, because he lost some money way back when he invested, and he wants to stay away from it, right? And I get that, but
the crazy part that he is already investing, because even now people don't think about investing as something they're doing actively, but having your money in a currency is investing.
Yeah,
that's the crazy part.
That's what
putting money in the bank is investing.
Dude, that's what you work hard for, and if those are like reduced, like even Argentina, like 15 to 30%, right, or China, then I do not think, like, my parents worked hard for that, like they didn't work hard so that at the end of the day, because of the whatever mismanagement by the whole system, like everybody had to pay for it, like so it's just about, okay, how can we be smarter at least to to be safe, at least a little bit safer in the financial crisis or whatever happens. But it's not like, even if my dad like did buy, let's say he would be willing, I would still not be suggesting him to buy like 100%. I'd be like, hey, you know what, like anything can happen. Maybe maybe the right amount is like, if you invest like 5% of your amount to just maybe gold, right? Yeah. If things go wrong, like $1 million of Venezuela currency to 37 cents, right? It's better to at least have 5% of maybe gold.
Yeah. At
right?
least,
But
you can
of
eat
course,
for a month,
and maybe more by then, because the prices of gold might go up. Yeah. But anyway, dude. Pensions and healthcare, they will be increasing the coming due and won't be able to fund it. Won't be able to be funded with assets. Said differently, I think that the paradigm that we are in will most likely end when a real interest rate returns are pushed so low that investors holding the debt won't want to hold it, and will start to move into something they think is better, right? Which is already happening, since interest rate around the world is almost going to zero, in some cases minus negative interest rate, right? Simultaneously, the large need for money to fund liabilities will contribute to the big squeeze. At the point there won't be enough money to meet the needs for it, so they will have some combination of large deficits that are monetized, currency depreciation, and large tax increases, and these circumstances will likely increase the conflicts between the capitalist have the social and the socialist have nots, right? So overall, dude, like, the holders of the debt will receive very low negative nominal and real returns in currencies that are weakening, which will be a factor of wealth tax, right? Yeah. So dude, like, this is what the experts think of the world economy right now, and that's what at least the goal is, that I get educated, so that if things go wrong, I know how to diversify my portfolio, right? I do not know how to diversify your portfolio.
No, everybody needs to do their own thing.
But the more I am searching, like, I know, like, the future is something different for us, right? And something very interesting is the gold market and what is happening with the Bitcoin market, right? Because now everything is technology, right? Maybe 10 years, 15 years ago, we would not agree, right?
No.
Even look at the TV channels, right? Those are one of the biggest industries, like media channels. Everything shifting to YouTube or online platforms. Songs. What industry is there that has not moved? Including our shop. We have a clothing store, right? But the new way of clothing store is the website, right?
It's online.
Visit the
Everything is
website.
online. I used to sell my images, prints. I sell everything online.
Dude, screw that. Dude, the generation who are like younger than us, you know what they sell? They sell game clothes, not even real clothes, right? They're like, hey,
I designed a little thing in my game, or even
I won. I played shit. I wasted shitload of time, and then I basically won this dress. Maybe I can give it to you. But yeah, I mean, everything is happening with technology, right? Whether it's even food, dude, people are making meat, right? And it's, of course, science and technology involved together. But Yeah, man. Maybe next video, we'll discuss a little bit about the what's happening in Bitcoin, why there's a craze. Since we already talked about gold, let's see what we can discover and what we can learn from there. Yeah.
That sounds amazing.
So until then, see you guys soon. Rock and roll.